A very good afternoon to you, great golf learners. My name is Mr. Simbi, and welcome back to the third term. It has been a very long holiday, and I hope you guys did manage to get some time to study. You remember you're in matric, so every minute does count. You need to continue to spend more time on your books because very soon we'll be sitting for our trial exams, and in no time, the final exam would have begun. So I'm really excited to have you back in my class again. And remember to invite your friends. Tell a friend to tell their friends as well that Mr. Simbi is back in class every Friday at 2:30. I'm here. And today we're going to begin with a very interesting topic. And I promise that I'm going to start it and then I'm going to complete it in today's class. We're not going to drag it to the next week. And then in the coming week, I'm also going to do a very interesting topic as well. So, as usual, you need to have received, you should have received a worksheet from your teacher, or it could have come from any other source. Your friends could have given it to you. If you got the chance to print it, that would be lovely because I'll need you to do certain calculations with me. I'll show you, and then you do them together with me. Remember, the purpose is that at the end of the year, we finish our exam paper and we get the best attainable results. Once again, welcome back to Term 3. In today's class, I have these objectives, very simple objectives, and I think together as a team, we can be able to achieve these objectives. Number one, we're going to talk on the concepts that relate to VAT. So I'm going to be starting on value-added tax. And to begin, I will discuss concepts that relate to our VAT. And then I will calculate amounts receivable or payable to SARS. Because you see that in most exam papers, the exam papers would say calculate the amount payable or the amount receivable. But it was a bit different with the NSC November 2024. It brought it a bit different, which I liked nonetheless. It was a very, very exciting question. And I'm going to break that question down together with you today. So once again, tell your friends that the lesson is on, and I expect you to be actively participating in this class today with me. Okay, so very key, very important. What is this value-added tax? Value-added tax is an indirect tax that is very key to note. It is an indirect tax charged by a vendor on the supply of goods and or services. A VAT vendor is registered for VAT and is then obliged to collect VAT from their customers. So the VAT vendor has the obligation to collect VAT from their customers or clients, and they do this on behalf of SARS. And once again, what does SARS stand for? Okay, it is the South African Revenue Services. So a VAT vendor is registered and is collecting VAT on behalf of SARS. So when they collect this VAT, it is not the money that they can use for their own personal business expenses, but they collect it on behalf of SARS. Now, a registered VAT vendor can claim VAT paid on supplies or expenses needed to generate the income for the business. I remember coming across a certain question which was saying, what are the benefits of the company registering for VAT? So you would understand that if you are registered for VAT, you are able to claim VAT that you would have paid on supplies or on expenses that were needed to generate the income for the business. So that is one of the benefits why a company must register for VAT. Okay, so this is our value added tax. Very key to note that a registered VAT vendor is a business enterprise that has registered for VAT. And once again, we register VAT for VAT at SARS. Now, there are different types of registration that a company can exploit. Okay, so I'm going to talk to those two different types of registrations. Firstly, there is what we call the compulsory registration, where you are compelled to register. Now, any business whose annual income exceeds 1 million is required, is compelled, is required to register as a VAT vendor. So here you can see that if your business is exceeding an annual income of 1 million, then you must register as a VAT vendor. But there is a second type of registration, which we call the voluntary registration. This is for any business whose annual income is less than 1 million. So you can see here now, if you exceed a million, you are compelled, compulsory. But if you are below 1 million, then you may voluntarily register as a VAT vendor. And you remember the benefit that I gave you earlier on, why you may register as a VAT vendor. So they can do this provided that the business has an annual income in excess of 50,000. So once your income is in excess of 50,000 but below 1 million, you may voluntarily register for VAT. Now, I'm going to move on to the different types of supplies. The different types of supplies. So we have 3. Okay, someone is saying, Mr. Simbi, you're moving a bit fast. We're taking notes. My bad. I'm going to try and be a bit slow. I know you're coming from holiday, so you need to warm up the engine. Okay, so we're going to talk about our 3 different types of supplies. The first type of supply is what we call the zero-rated supply. The zero-rated supply. And then we have another one called standard rated supply. So this becomes the second one. Remember, this is my first, my second, and then lastly, we have exempt supplies. So when you look at a product, when you look at a service, you need to understand, where does it fall in? Is it zero rated, is it standard rated, or it is an exempt supply? So let's break them down one at a time. And I'll go through them slowly with you so that you can take down notes. So let's go one at a time. The first one is what we call zero rated supply. So with these ones, you can see the keyword here is zero. These are supplies of goods and services on which output VAT is levied at a rate of 0%. So VAT is charged, but it is levied or charged at a rate of 0%. Very key to note. It is charged or levied, but at a rate of 0%. Now, the items that can qualify for this is mainly your basic foodstuffs. So we are looking at your brown bread, your maize products, okay? You're looking at your rice, milk, fruit, and vegetables. You're looking at your lentils, vegetable oil, eggs, canned pilchards. All right. So let's move on to the next one. And the next one is exempt supplies. Exempt supplies. Exempt supplies. Now, with your exempt supplies, these are goods or services that are not charged VAT. They are exempted, not included. They are exempted. Now, you will see that we spoke about the standard rate and the zero rate. So, with these goods, the standard rate or zero rate is not applicable. We don't charge them VAT, either at 0 or at 15. We don't charge them VAT. They are completely exempted from VAT. And they include financial services of rental of a private residence, transportation of people in South Africa by road or rail, educational services that are supplied by the state, and childcare services. And then now we come to the obvious one, which is our standard rated supplies. Now, these supplies are goods and services that are subject to VAT at the rate of 15%. So these are goods that are subject to VAT at 15%. Okay, so how many types of supplies did I speak about? 3. Zero rated, exempt, and standard rated. And what are the 2 options that are there for a company to register? Firstly, it is your compulsory registration and your voluntary registration. So these are some of the concepts that we have mentioned so far as we began today's class. I want to go on to something a bit more exciting, I want to talk about the flow. So we talk about input tax or input VAT as well as output VAT. Now, let's go and look. Input VAT. What is input VAT? Input VAT is the VAT charged or paid by a vendor when buying goods or services from another VAT vendor. Very key. The input tax is included in the cost of goods or services. Okay, let me explain a few things here. Whenever we are dealing with VAT, you have to know whether you are going to get input VAT or it is output VAT. So how do you do that? There is a number of ways in which you can ascertain whether it is input VAT or it is output VAT. Very many ways which you can do that. For instance, you can either follow, number one, the money. Number two, you can follow the goods. These are two mostly commonly used methods. You follow the goods or you follow the money. But for today's class, we are going to follow the goods. We follow the goods. Okay? We're going to follow the goods. So in other words, whatever direction the goods are going, it will tell us whether it is input VAT or output VAT. We look at the direction of the goods. Did you follow me? We look at the direction that the goods are going. And if the goods are coming in, therefore it's input VAT. But if the goods are going out, you got the answer already. You ready? Okay, let's give it a try. So this is our supplier. This is the business where we go buy stock from. That's our supplier. These are our suppliers. Okay, and remember, these are also VAT vendors. And we have acquired goods, and the goods are coming into our business. This is us now. So you can see now the direction which the goods are taking. They're coming from the supplier into the business, into the business. So whenever the goods are moving into our business, we then consider that to be our input VAT. Very simple. Simply follow the goods. We follow the goods. So now we understand that our input VAT has to do with us acquiring goods, buying goods or services from another VAT vendor. That is your input tax. Okay. We good? Okay, let's quickly go on to the next one. Output VAT. By now you have an idea. You have a sense of direction as to what could be this output VAT. Okay, so this is VAT charged by a VAT vendor when it sells goods or renders a service. When it sells goods or renders services. Key, when it sells goods or renders a service. Now, the output tax is included in the price charged for the goods or services. Again, what are we doing? We are following the goods. We're following the goods. So, this is our customer's home, our consumer's home. This is someone's home. Okay, this is someone's home. All right, and we can see they're happy. Why are they happy? They're coming from our shop. They got their groceries, they got their packages, they got their goods. But these goods, in that case, are coming from our shop. They're going out of the business. So we are selling in this case. We are selling the goods. The goods are going out. And when the goods go out, output VAT, because the goods are going out. You can see that lady is indeed happy because she took the goods out of the business. Output VAT. We have sold the goods out. So, very key. In this lesson, I've shown you one method to determine or to ascertain whether it is input VAT or output VAT. And that method that I've given you is to follow the goods. We follow the goods. not the following the money method. I don't want to confuse you. I'm just going to use one method. We follow the goods. When we purchase, goods are coming in, input VAT. When we sell, goods are going out, output VAT. And then life becomes easy. Let's go on to the next part. When calculating VAT, it is important to establish whether the figures provided are VAT inclusive or VAT exclusive. Now, whenever you are doing question papers or whenever you are dealing with transactions, it is very important to ascertain, to determine whether the amount is inclusive or exclusive, or it is the VAT amount already. Now, you will see that in most NSC papers, in most of the papers, even with the transactions that I will deal with today, you will be able to see that that amount is inclusive, that amount is exclusive. So it is not something that we're just gonna guess. It is something that would be given already, inclusive as well as exclusive, and the VAT amount. And there are certain transactions that you will be able to see. In this one, VAT was already included. Okay, so we have the selling price, exclusive. Exclusive simply means does not include. Exclusive, it means does not include. So if an amount is exclusive of VAT, it is 100%. Exclusive does not include, it is 100%. And when amount has VAT, the VAT is 15%. Remember, standard rate, the VAT is 15%. And then we're going to now say 100 plus the 15. It gives you the 115. That becomes our price inclusive of VAT. Inclusive of VAT. Now, I'm going to take you through something very, very key, very, very important. And I want you to follow this as I'll be explaining it. Okay, so here is what I want to show you. Here is a VAT control account. A VAT control account. This is a summarized version. And with the calculations that I'm going to be doing, I'm going to be using this VAT control account. I'm going to be using it. And you'll be able to tell whether it's input or output. Remember, we said we follow the goods. We follow the goods. Now, at the beginning of the period, you'll be told, the examiner in most cases, they'll tell you the amount that is either owing to SARS or owing by SARS to us. So, if an amount is owing to SARS, it will have a credit balance here. That is a liability. It is owing to SARS. We owe SARS. As you can see, you have it here. And the opposite is therefore true. That if an amount is owing by SARS, it means SARS owes us. And if SARS owes us, it will have a debit balance that makes it an asset. Hence, you see it on the debit side, as you see there. The examiner will give you one of these two, and you see in today's activities. In each activity that I've prepared for you guys, I'll have either owing to SARS or owing by SARS. But in this format, I showed you both, because the examiner can bring either or. We good? Now, let's begin with the first thing. What will happen is we're going to go buy goods. You're following me? We're going to go purchase goods. So when we purchase goods, here's creditors control. CJ, we've acquired goods. And we get to a point when we have acquired these goods, we record it under input VAT. Remember, we established that goods are coming in. So it becomes input VAT because goods are coming in. We've acquired goods, goods are coming in, input VAT. And then we realized that some of the goods were wrong quality, wrong color. So we return them back to the supplier. We're talking creditors' allowances in that case. So goods are now going out. We return the goods out. Output VAT. We're still together. And then when we receive discount, on those goods that would have paid, and then that is discount received. There it is, on the output VAT. It is in a way decreasing this input VAT. You have to understand that the moment we're putting it on the output, it is decreasing the input VAT. Okay, and you see that when we have an amount on the output VAT, we decrease it by putting it on the input VAT. And that is how it would work. And then we then sell goods. DJ, you have sold goods, so goods are going out. Sells DJ. And then the payment, therefore, CRJ, as you can see here, input. And then we have debtors that are returning goods to us. Debtors that are returning goods to us. Because we sold them, it was output VAT. And then when the debtors return goods to us, it becomes input VAT. There you see, debtors allowances. And when we allow discount to our customers, to our debtors, there it is, discount allowed there. And when certain debtors cannot pay, we call that bad debts. Our bad debts input, because it seeks to decrease the output VAT. It seeks to decrease the output VAT. Hence, we see it on the input VAT, our bad debts, there, like that. And then you also see a transaction like this from the PCJ. It can also be a refund. And you can come here and see on the credit side, you now have your bank, CRJ, which can also be here on the CRJ. It can also be a refund as well. And then with bad debts recovered, remember we're treating them as bad debts here. The moment they get recovered, you have here bad debts recovered. So this amount of bad debts recovered, it seeks to cancel the bad debts that we had written off here. Because remember, we had sold goods, output, and then our output VAT increased. And then we had bad debts. So we had to decrease the output VAT. So we had bad debts here, we bring it on the input. The moment that amount is recovered, we bring it back again to the output. And there it is, because it must still be paid over to SARS. And then donation, goods are going out. And so you're going to have your output there, donation. Drawings, goods are going out on the output VAT. And then as a disposal as well, here, the goods are going out. And then you either have VAT receivable, depending on where the balance is, VAT receivable or VAT payable. But I'm going to explain this even as we go in today's lesson. Let's have an activity which we can calculate together now. Okay, so to begin with, we have activity number 1, which is extracted from the DBE prelim for the year 2021. Now, before we begin this activity, we're going to take a quick 5-minute break, exactly 5 minutes. So make sure you get yourself some fresh air, glass of water, and then in 5 minutes time, we continue. See you in 5 minutes. Welcome back, guys. We are coming from a very short 5-minute break because we're about to do our first calculation. And as I say, it is from the DBE prelim for the year 2021. And my focus is on paper 2, question 2. Okay. And it reads, Forever Traders. Required. Tom Smith is the sole owner. The information relates to the VAT period ended 31 August 2020. The standard VAT rate of 15% is applicable to all goods purchased and sold. Calculate the VAT amount that is payable to SARS on the 31st of August for the year 2020. And we stand to gain 9 marks. That is a lot of marks in an examination. And you should be able to get all these 9 marks. And you should do it in record time, fast and swift. Okay, so what I'm going to do, here's the information that we were given. I'm going to stick to what I have taught you, what I've been talking about from the very beginning of this lesson. I've been talking about the VAT control account, and you have your input and your output. Input on the debit side, and then your output on the credit side. I'm going to do this first, and then later as we go, I'll come with a different method as well, but something similar. I'll try not to be confusing you. I'll not bring very drastic changes. I'll just teach you something similar to this. So to begin with, I'm going to do the VAT control account. Remember, we did this in grade 11. In grade 11, we did the VAT control account, and it was much easier to understand. So let's begin. So you're going to need your calculator. Make sure you have your calculator ready so that we can do certain calculations. Let's read. The amount due to SARS, keyword, due to SARS. So we owe SARS in this case. So if we owe SARS, where is it going to be? Is it going to be on the debit or it's going to be on the credit, on the output? If we owe SARS, that means it is an output amount. So it goes to the credit side. So I'm going to write here, I'm just going to write balance. Okay, so then you can follow me. Balance brought down, and my balance is how much? 31,470. 31,470. That is the balance due to SARS, a liability amount. Let's go. And then we're going to do this information, and we get this VAT amount here, and we record it as we go. So the first one is total sales. This one was a very interesting one because I was given here VAT exclusive and VAT inclusive. And I need to understand that the difference between these two amounts is my VAT. Let's see if we can get our adding machine and get these figures. Here's our adding machine. So we're now going to say 615,250. Then we say minus 535. Like that. And that should give us 80,250. 80,250. So if I get my 80,250 here, the question then is it input or output? Remember what we said, you follow the goods. If we are selling, are the goods coming in or the goods are going out? Definitely going out. So I'm going to say sales here, so then you can understand. And then I'm going to have my 80,250. Now, when you prepare for the prelim and the final, you don't need to write these details. That must have stuck on your mind already. It must have stayed already in your fingertips. You already know that it sells, so it's going to be output, or it purchases, so it's input. But for the sake of understanding in this lesson, I'm going to be saying these things: sales, purchases, donations, drawings. But the more you practice, the more you know, okay, it sells, it's output. Okay? But for these slow processes, I'm going to be writing everything as to what it is. And then the next one, purchases of stock. Purchases of stock. Now, we are given an inclusive. That means this amount is 115. It's inclusive. So what we want here is the VAT, which is 15%. And what we have is 115. Very easy. So on my calculator, I should be able to do this. What do I want? I want 15. What do I have? I have 115. and I multiply that by 442,750. Okay, and that should give me 57,750. So 57,750. What is that? That is my VAT. The question is input, output, purchases. We're back. Purchases, input. So I'm going to come here. It's going to be purchases. And I have my 57,750. Like that. We good? Beautiful. Let's go to the next one. I can see it's flowing on now. Let's go to the next one. Discount received from suppliers. Okay, so that discount is going to decrease our input VAT. That means already my discount received is going to come here. This is my discount received. It will decrease the input VAT. Okay, what do I want? I have been given VAT exclusive, and VAT exclusive, remember, it is 100. VAT 15, inclusive 115. That should have been there already right from the very beginning. Okay, so let's come here. What do I want here? I want 15. What do I have? I have 100. Easy peasy. Let's see if we can punch that onto the adding machine. Here we go. I want 15, but I have 100, and we multiply that by 11,500. That should give me 1,725. 1,725. So I'm coming here to say my discount received is 1,725. Okay, next one, please. Goods returned by debtors. First, let's get the VAT amount. Oh, this one was a giveaway. It's just like the first one. We just get the difference between our inclusive and our exclusive. Let's see if we can do that together. So I'll say 25,875. We subtract 22.5, and that should give me 3,375. So I come here, 3,375. What is that? That is the VAT. So if I have VAT on goods returned by debtors, input, definitely. So it's input. So I'm going to come here and I have my debtors allowances here. I have my debtors allowances. How much? 3,375. We good? Beautiful. Okay, the next one is stock taken by owner at cost. Stock taken by owner at cost. And what we want, it's obvious. We want a 15, that is the VAT. And what we have, we're given exclusive, that's 100. So, adding machine, where are you, my friend? There you are. And then we now say, what we want is 15, and what we have, 100. Lovely. And then we multiply that by 9,600, and then we have 1,440. So I'm coming here, 1,440. Stock taken by owner. Taken. When the goods were taken, were they coming in or they were going out? Where was the owner taking them? Home. So the goods were going out. So it becomes output VAT. Drawings. Drawings. And we're coming here 1,440. The last one. Debtors accounts written off. Is that bad debts? Definitely. That's bad debts. Debtors accounts written off. These are your bad debts. So we need to calculate the VAT. What are we given? Inclusive. Inclusive, that's 115. So I want 15, and what do I have? 115. Okay, let's see. Are you there? There you are. Let's do it together. What do we want? 15. What do we have? 115. We multiply that by what? By 36,800. Okay, and then what are we going to get? 4,800. Bad debts. Bad debts. How do bad debts even come about? Remember, sales output. And then the moment we cannot get that amount, we seek to decrease that output amount. So we decrease it by recording it in the input. So our bad debts would be on the input. Bad debts. How much are we talking about again? How much do we get on the calculator? 4,800. Thank you. 4.8, like that. Okay, so we close off the ledger account. We close off the ledger account. What do we look for? The side with the highest amount. Let's do it together. So clear your calculator nicely. Here we go. So we're going to say 31,470. 31,470. Are you following? Then we're going to add the sales amount, which is 80,250 plus 80,250. We're going to add 1,725. 1,725. We're going to add 1,440. There you go. And that will give us a total of 114,885. 114,885. 114,885. And then here we should get our balance carried down. And how do we get that balance carried down? We say 1185, 114,885. Then we say minus 57,750. Then we subtract 3,375. Then we subtract 4,800. Like that. And then that will leave me with 48,960. 48,960. So we have our balance here now. Balance brought down. 48,960. If it is on the credit side, that means this amount is payable to SARS. Payable to SARS. Payable to SARS. That is what we end up with. 48,960. Okay, so I thought maybe you won't be able to see my handwriting. I'm just joking. I know you can read. So I have the typed answer here for you. And I wanted to explain this, that a credit balance will indicate that VAT refund is due to SARS. This is VAT that is payable to SARS. And then a debit balance will indicate that VAT refund is due by SARS. Okay, so this one, it is going to be paid over to SARS. Let's come to activity number 2. Activity number 2 is from the Eastern Cape Prelim for the year 2023. Okay, I hope by now you have received this particular worksheet from your teacher or from your friends. This worksheet is indeed making rounds. Make sure you get it. Always make sure that by 2 o'clock you have the worksheet. If late, by 2 o'clock, ask people, knock on doors, ask the right questions. And if people have the worksheet, they'll print it out for you so that life can become easy. This is in preparation even for the next week class. Again, activity 2, let's go. Eastern Cape Prelim for the year 2023, and the information reads: the information relates to big stores for the VAT period ended 30 April 2023. The standard VAT rate is 15% required. Taking into account the errors and omissions, calculate the VAT amount that is payable to SARS. And we have this scenario here, and we're going to attend to it. First, let's do this one together. We calculate the VAT payable or receivable. Oh, this one is clear. It is the amount that is payable to SARS. Amount payable to SARS. Okay, so I'm going to do this one in a similar manner again, and then we see if we're going to benefit from that. Where do we begin? We begin with information A. Always start from the beginning. Amount due to SARS. To SARS. So it means my balance is here. Balance brought down 12,750. It is due to SARS. And then we are told total sales. Sales means output. So I have my sales here. That's 63,450. 63,450. There is my sales. 63,450. Output VAT. The next one. Credit purchases of stock. Credit purchases of stock. So we're coming here. Purchases is input. That's obvious. We have been saying this for the millionth time. So it's your 21.9, 21,900, like that there. Beautiful. Errors and omissions noted. Okay, here we go. Number one, stock taken by the owner. The cost price is 4.3, and that excludes that was not yet recorded. So if stock is taken by the owner, we have our 4.3 here. And you know, when stock is taken by owner, this is drawings, so it's 4.3, and they told us that amount is exclusive of that. So we want 15, and what we have is 100. It's 100. It's 100. 100. Exclusive. Exclusive. Exclusive is 100. Okay, let's bring the adding machine. Let's see. So what we want is 15. What we have is 100. And we multiply that by 4,300. We still together? Aha. And then we get 645. That's my drawings. Goods are going out. Drawings. Goods are going out. 645. Drawings. 645. Let's go to the second bullet. It reads, certain goods with a selling price of 25,000. So we have goods with a selling price of 25,000, and that excludes VAT, which is 100%. Was included in the sales amount. These goods should have been recorded as zero rated items. So it means I'm coming here and I'm going to say 25,000 is certain goods with a selling price, and that is exclusive. 25,000 multiplied by 15 over 100. Let's see how much that is going to give us. So I want 15. I have 100. I multiply that by 25,000. That will give me 3,750. The VAT in these goods is 3,750. Now, this amount should have been recorded as zero rated items, but it was included in the sales amount. So that means it was recorded on the output. That increased the output VAT amount. So to correct that, we're now going to bring it onto the input. Okay, so this is the zero rated items. I'm correcting here. Zero rated items. I'm correcting, remember, that's 3750. It should have not been on the output. So we bring it onto the input. You could have said sales again. As long as you know you are trying to decrease the amount on the output by putting it on the input. Okay. And then the next one is VAT on discounts. VAT on discounts granted to debtors was not recorded. The total discounts allowed amounted to. So once we are given the total discounts, that amount is inclusive already of the VAT. So what we want is 15, and what we have is 115. So if we come here, we are now going to say, all right, let me quickly go back. Okay, this is where we were, and we want to get our adding machine. So we are going to say what we want is 15, and what we have is 115, and we're going to multiply that by 14,720, and that will give us 1,920. 1,920. Now, this is discount to debtors. So your discount is on the input. Here's your discount on the input, and that is 1,920. So what are you going to do? You're going to add up. You're going to look for the side with the highest amount. The highest amount is indeed on the credit side here, on the output. So you come here and you say, how much is the amount here? It's going to be 76,845. So here you have 76,845. And then you're going to come here and you're going to have balance carry down. And the balance carry down is 49,275. So here you're going to end up now with balance brought down, which is 49,275. That ends it. Okay. And then we're going to quickly come and do the theory question that followed, an internal control question. And it reads, the internal auditor discovered that the owner Benjamin uses the VAT collected from customers to pay salaries and bonuses. Remember when I began this lesson, I told you that if you're a registered VAT vendor, you collect VAT on behalf of SARS. But this Benjamin guy is using the money collected to pay salaries and bonuses and was not paying the full amount due to SARS on the deadline dates. After one point of advice to Benjamin, offer one point of advice to Benjamin and explain or give a reason to support the advice. Okay, so to begin with, Benjamin must keep separate records for VAT and he must pay this on time. The reason is VAT that is collected on behalf of SARS because he's a VAT vendor, therefore he acts as an agent of SARS. He should not use the VAT money as a business cash resource. Benjamin should stop doing this. And money does not belong to the business. The reason is the VAT that is collecting does not belong to the business. The next point is Benjamin must budget for business expenses and manage the liquidity with funds earned he should generate or that he generates through normal business operations. Now, the reason is he could run into liquidity problems, or if he defaults with VAT, it is a crime and the business can be sued. And once this is uncovered, the image of the business will be compromised and he could lose customers because of bad reputation. All right, let's quickly come to activity 3 as we are trying to chase against time. I think on your worksheet you have seen 6 activities. So we desire to do all the 6 before we say our goodbyes. Okay, let's come here. Activity number 3. And our activity number 3, remember, this is extracted from the NSC November paper for the year 2022. Okay, what do you have in store for us? It reads, the information relates to Nomhle Traders. The business is registered for VAT. The standard VAT rate is 15%. Nomhle also sells 0 rated goods. So already we can see we're going to have problems here. There is a likelihood that we're going to charge VAT on 0 rated goods. So we need to look into that also and correct that as we did earlier on. Required. Calculate the VAT amount that must be paid to SARS for the VAT period. So in this question, we are not being asked to determine whether it is receivable or payable. The question is already directing us towards one path, that is the VAT that must be paid to SARS. Okay, and here is our information and we have our book. So in this lesson, in this activity rather, I'm going to show a second method, which is more like a sentence method, where you just have one line running across. But to understand that line, I'm going to extract the information from the VAT control account. I always find T accounts making accounting very easy. It makes it like accounting literacy. You know, once you have your T account ready, it just dilutes the entire thing and you understand it a bit better. So you remember we have our debit and we have our credit here. Okay, input, output. Okay, information A. Harry the clerk calculated the VAT amount due to SARS, credit liability. So we have our balance here, and that is 55,785. We good? Beautiful. However, he did not take the following into account. He never considered this into account. Number 1, VAT, keyword, VAT on goods returned. So here they don't want us to calculate anything. They are giving us the VAT. Read how the sentence starts. VAT. So you must know. No need to calculate here. You are given. You just need to place. Input, output. Goods coming in, goods going out. That's all you need at this point. So goods returned to suppliers. Goods returned to suppliers. So I'm going to say here, this is my creditors' allowances. All right. So I'm going to come here. How much was that? 5,070. Easy peasy. Okay, next one. VAT on expenses paid. VAT on expenses paid. So once it's expenses paid, that is your input. So we're coming here, expenses here. Expenses, that's your input. How much do we have here? 6,240, like that. 6240. We good? Okay, let's do the last one now. VAT on goods taken by Nomhle. Remember, Nomhle is the owner. So personal use, we're talking drawings here. Okay, goods coming in or out. Easy, out. So we come here, is drawings. There we are. And how much is that? 5,400. So I come here, I get my 5,400. Beautiful. And then now, information B. Information B. It trades. So here we're going to need to have the calculator now. Not to worry about it. Here we're going to need the calculator. VAT on discount allowed must also be taken into account. The total discount allowed amounted to 18,860. So, do you see any similarity with the previous question? Something like that. It was on the discount. And you see that when we come to this discount, they don't tell us whether it's inclusive or exclusive. They just use the word total. So that is to tell us that this amount is inclusive of that. So when we come here, we're going to say 15 over 115. And let's see, are you there? Ah, you're still there, my friend. So we say 15 over 115. And then we multiply this by 18,860. And then we get how much? 2,460. So we hear 2,460. What is this? VAT on discount allowed. And once it is discount allowed, here is your discount allowed. And 2,460. Let's go to the next one. VAT on sales was incorrectly recorded. VAT on sales was incorrectly recorded. Certain goods with a selling price of 31.2, excluding VAT, should have been recorded as zero-rated items. You remember I told you, we knew this was going to come. The moment we saw that transaction that says the business sells both standard rate and zero-rated, we knew the possibility of an error is very high. And here is our error. And we have to deal with this error and correct it at the same time. So what are we going to do now? We understand that the goods are for what? 31,200. And this is their selling price. And that excludes VAT. So let's know how much is the VAT on these goods. How much is the VAT on these goods? So we're going to come here and we're going to say 31.2 multiply by your 15 over 100. I know there are faster ways, but in this class, we do things slowly, okay? Yeah, no need to rush, chill. We need to make things very clear. Okay, so we have our 4,680. What is that? That is the VAT on these goods. And this was incorrectly recorded as sales. Certain goods with the selling price of that. So that amount was included in the sales amount. That increased our output. So if we're to decrease our output, we'll take that 4,680 years, and then we need to record it in the input. So we're coming here now. You can say, yeah, it's 4,680. You can call it correction, or you can call it sales. It's okay. As I said, in the exam, you're not going to get marks for the details. It is the placement of the figures. Is the figure on the right side of the T account, especially depending on where you would have put your balance. I would encourage you, stick to one method that you understand. Don't sweep or crisscross method. If you use the T account, use the T account. If you do the line equation, linear or straight method, or the sentence method, use that one. That makes it very easy. Don't be changing methods as you practice. Stick to what you know, and what you know will always give you a very beautiful mark. Okay, so this is what we get here now. Do we have anything? No, we need to total. We need to total. We need to total. We need to total. Calculators. So we're going to add everything here. And if we add everything here, it gives us 66,255. So we come here at 66,255. So we're going to come here now and we're going to balance carry down. So we're going to get the difference between 66,000 and that, and that, and that. And that's going to give you 52,875. So I'm going to come here and I'm going to say balance pro down, 52,875, 52,875. Okay, let's see. If you're doing the line method, so there are two ways in which you do the line method. You can start off with your balance here. It is due to SARS. You can just record it without a negative sign, or you can record it with a negative sign. Those are two ways in which you can do it. Let's do this one when we record it without a negative sign. So we're just going to start with it as 55,785. So we know once it is this, it is an output amount. It must be paid over to SARS. So any output amount will increase this figure, and any input amount will decrease this figure. That's the principle. Any output amount will increase that figure, and any input amount will therefore decrease that figure. So we'd come here and then we'd then say the first figure to deal with is that VAT of 5,070. So that is what? VAT on goods returned to supplier. So it's output, so it's going to increase that one. So you come here, then you say plus 5,070 output, because this amount is an output. So this is also an output, so it would increase it. And then VAT on expenses paid. Expenses are input. Input is going to decrease it, 6240. VAT on goods taken by the owner, goods going out, output VAT. Output VAT is going to increase that balance. So we come here and we add the 5.4. VAT on discount allowed, remember, that's discount. Discount is input, so it's going to decrease that amount. That's 2460. VAT, which was incorrectly recorded. So remember, we had overstated our output. So in order to correct that, we are going to subtract from the output, minus 4680. And your calculator should definitely give you your 52,875. That becomes the final answer. So you have two ways. Either you do it this way or you do it this way. It is the method that you're comfortable with that will get you more marks. And remember, it's all about marks and time. Marks and time. Activity 4. Okay, we're going to begin activity 4, but before we start activity 4, let's go for a 2-minute break. Exactly 2 minutes. I see you in 2-minute time. See you after 2 minutes. We are going to continue now with activity number 4. We have done activity 3 and we are now on to activity number 4. Let's go. Here's activity 4. We're back again in the Eastern Cape and we're focusing on the Eastern Cape prelim for the year 2024. And again, remember we're in paper 2. Okay, the information reads, the information appeared in the books of Nkoli traders for August 2024 required. Use the information to calculate the amount owed to or by SARS. You see the difference now. In this question, we need to ascertain, we need to tell the examiner, we know that the amount is due to or due by SARS. So there is that aspect in this particular question. For that on the 31st of August, that is for the year 2024. Okay. Are your calculators ready? Okay, let's go. This one was, this one was a giveaway. This one was a giveaway. I wish I could give you time to say, you know what, here's 5 minutes, try it on your own, then we mark it, you know, that kind of a thing. But if you've already done it, that would be lovely. Then we can mark it together. But this one was a really nice one. Let's do it together. Let's do it together. Balance in the general ledger on the 1st of August 2024. How much is it? VAT 1,245. And they say credit. You see now, we know that we have debit, we know that we have credit. And here they gave us a credit balance. Credit means liability. So this is an output amount. Okay, so we're going to come here. So in this case, I'm not going to be writing the details no more. I'm just going to be placing the figures. Okay, no more details because you now understand. You now understand. Input, output. So no more details, just figures. We go. Okay, so I'm going to come here. Credit, they told me it's 1,245. Let's go. Number 1. Cash sales of stock. Cash sales of stock. And what we want. Remember, exclusive is 100. VAT 15. VAT inclusive. Where are you inclusive? VAT inclusive. Okay, here's VAT inclusive here, 115. And therefore my VAT, let me take that one out. This is my VAT. That is my VAT because my VAT inclusive was given there. There. It is VAT excluded, VAT included, and VAT 15%. Very key. Very key. Otherwise, you end up calculating what you are given. So, VAT excluded 100, VAT included 115, VAT 15. Cash sales of stock. We are given the VAT amount, 18.9. We are given the VAT amount. Sales output. So I'm coming here, 18,900. Like I said, easy peasy. Let's go to the next one. Trading stock bought and paid. CPJ. Trading stock bought. So this is stock coming in. We come here, 13,185. Next one. Trading stock bought on credit. Trading stock bought on credit. Stock is coming in, 11,985. 11,985. Trading stock sent back to creditors. Creditors allowances. Stock is going out. So that is 5430. 5430. Trading stock sold on credit. Sold on credit. Output. Multiply by 15. And what we have is 100. Let's see if that is going to give us an amount. It's going to be, we want 15. We have 100. We multiply that by 134,460. That should give us 20,169. What is that? Stock sold, 20,169 output. And then the next one, which is the last one in this activity, trading stock sent back by debtors. Trading stock sent back by debtors. This is debtors allowances. So here we are given the inclusive. We want 15. We have 115. Very key. So we are going to say we want 15. We have 115, and we multiply that by 10,764. That will give us 1,404. Stock sent back by debtors. Debtors allowances journal. Allowances, it is input. 1,404. We close this account. The side with the highest amount, like that, like that. So if we add up everything here, how much are we going to get here? You're going to get your 45,744. 45,744. 45,744. Then you subtract these three figures. Then you're going to get your balance carried down, which is your 19,170. So you get your balance brought down here, 19,170. If it's credit, it is payable to SARS. That amount is payable over to SARS. This one, as I said earlier on, it was a good question. It was a good question. Okay, so you could have got this one in record time, very, very fast. Okay, so if you're doing the sentence thing again, the same thing would have applied again. Remember, if you start with your output amount. Okay, maybe I'll just change the signs in this case. Let me start with the negative amount. Because output, liability, so I'm going to give it a negative, minus 1,245. And then we have cash sales output, so that increases my output. So I have 18.9. Okay, and then trading stock bought, once we have input, it decreases my output. So I come and say plus 13,185. The next one, trading stock bought on trading stock bought again, that is going to do the same thing again, decrease my output. So it's going to be plus 11,985. And then trading stock sent back to creditors. Trading stock sent back to creditors. And you see that is your output. So it's going to increase my output. So it's a minus 5,430. And then trading stock sold on credit. So these are sales. It increases again your output, 2169. And then lastly, goods sent back. That's your input. So it decreases that one, 1404. And then if you punch that in your calculator, then you still get a negative amount, which is a negative 19,170. That tells you that the amount is payable over to SARS. Okay, let's quickly come now to activity number 5. Activity 5. Activity number 5. So we're getting closer now to the NSC November 2024. So this is from the NSC June 2024. We're in paper 2. We're in paper 2. And this was a very, very interesting question because it needed you to apply your mind and get to see certain figures. Okay, so it says, the information relates to Mpati Enterprises, owned by partner John, Jacob, and Jeremiah. The business is registered for VAT. They buy and sell standard and zero rated products. Already you know errors are coming. For cash and on credit, the standard rate is 15%. 2.1.1. Calculate the VAT amount on the goods sold by the business and calculate the VAT amount payable or receivable from SARS. So similar, we've seen something like this. Okay, so to begin with, we're going to calculate the VAT payable or receivable, but there's a question that we were given, the first one. Remember the very first question, which was calculate the VAT amount on goods sold by the business. So let's do that one first. If we're to calculate the VAT amount on the goods sold by the business, which was your 2.1.1, and this one would become 2.1.2, you would see that you have total sales here, which is 839,800, and these are exclusive. That makes them 100%. We have our VAT, which is 15%. Then we have our inclusive, which is 115%. Now, we are then told that all zero-rated purchases were sold, okay? All zero-rated goods purchased were sold at 10% below cost. And here we have our zero-rated products here. So all the zero-rated goods purchased were sold at 10% below cost. So these are purchases. Purchases are talking to cost. Purchases of stock, they're talking to cost. And we're then told that these goods, with a cost price of 182, were sold during a sales promotion event at 10% below their cost. And the examiner did split these two. You can see this is purchases of stock, and we know we are dealing with cost here. And this is sales. Obviously, there is markup included. Now, this amount is included in the total sales figure, which is this one, total sales figure. There were no other zero-rated goods sold during April. So, it means when I look at my 839,800, my 839,800, that figure, it includes this 182,000 goods that were bought. We paid 182, but when we sold them, we did not sell them at 182. We sold them at 10% below. So I need to know what is that amount. So that would mean that I would then say 182,000, that was their cost. But we sold them not at cost or above cost. We sold them below cost, 10% below. That means when their cost is 100, when their cost is 100%, we sold them at 10%. We took 10% out, and we sold them at 90. This is what we sold them at. We took 10% out. So we sold these goods at 90%. At 90%. What is that sales amount then that we received from these particular goods? That would mean that we would say 182,000, and we sold them at 90%. That would give us 163,800. So we received 163,800, and that 163,800 is included. This amount, the 163,800, is included in the total sales figure, in that figure. So let's take it out, minus 163,800. We take it out because these are zero-rated items. How much do we then get? Let's see. We will say 839,800 minus 163,800. That will give me 676,000. So that means here I have 6. Okay. Let me go back. There it is. Here I have 676,000. 676,000. That now is for my standard rated sales amount. And that amount is exclusive of VAT. That means if I want their VAT, I would then say multiply. So this is the sales amount. Remember, let's see again what the question was saying. Calculate the VAT amount. So we want the VAT amount. What we have here is the sales amount. So we get the VAT, which is 15 over 100, because that amount is exclusive. So we come here, then we say 676,000 multiply by 15%. That will give us 101,400. It will give us 101,400. That was the answer to 2.1.1. Having done that, we know that that amount should then come here. But we have an amount due by SARS. By SARS means input. So I have my 5340 due by SARS. 5340 here. And then we have our sales. We know sales is output. 101,400. So we have recorded that one already. We're still together. And we are given purchases. And the VAT on the purchases is 82,200. So purchases is input, 82,200. Purchases is input, 82.2. And then lastly, not lastly, we still have more. We are given the debtors accounts written off. This is bad debts. So if we have bad debts, we're going to multiply this by 15 over inclusive 115. So we're going to come and we're going to say 15 over 115 multiply by 31,510. 31,510. That is going to give me 4,110. So 4,110, this is bad debts. We know bad debts is input, 4,110. And then lastly now, we have discounts received from creditors. We know discount is output. Discount received is output. And we're given the amount, which is 4,800. So you come here, 4,800 over there. You look for the side with the highest amount, and you close this account over. So this is bigger. So you're going to end up with 106,200. 106,200 here. And then you're going to get now your balance carried down. So you're going to say 106,200 minus. And then you're going to end up with your 14,550. 14,550, which you then bring here as your balance brought down. 14,550. Then the question was saying we should ascertain whether it is payable or receivable. It is on the credit side. It indeed is payable. 14,550. And then the very last question for the day, the most recent paper. The most recent paper, we're talking about the NSC November 2024. Here it is. NSC November 2024, paper 2. Okay, activity 6. Let's go. The following information relates to the financial records of Zaba stores for the VAT period 31 August. 15% VAT is applicable. Certain items are 0 rated. Okay, and then in this table now, we're required to show the calculations, the VAT amount, and the effect on VAT payable. Effect on VAT payable. VAT payable, that's output. Okay, so we want to show the effect. This is what this question is trying to do. Okay, so we're given the owner took stock, and that was the example. Let's do A. It reads, received discount. So this is discount received when settling the account of the supplier. So we received discount. So we're going to come here. It's going to be 17,250. And we're going to multiply that by 15 over 115. Okay, let's see how much we're going to get. So it's going to be, okay, so we're going to get our 15 over 115, and we multiply that by 17,250. And that should give you 2,250. So we come here, that's 2,250. Now, the question then is, does it increase the VAT payable to SARS or decrease the VAT payable to SARS? So you have to keep in mind that output increases the VAT payable to SARS. Output increases the VAT payable to SARS. And input decreases the VAT payable to SARS. So if we received discount, what does discount when we are settling? So this is discount received. So when you receive your discount, that discount will therefore increase. So you come here, it is an increase here, because your discount received goes to the output side. So it's an increase here. It will increase it. Let's come here. Next one, B. Merchandise amounting to 139,200, VAT exclusive, including zero rate items for 9.2 were sold on credit. Okay, let's do this one nicely. So we have 139,200 here, 139.2, and this merchandise amounting VAT exclusive, including zero rated items were sold on credit. So let's see what would be the VAT on this merchandise then. If we get that VAT, then we just get the difference with the VAT for this amount. So it's 139.2. We get the VAT because it is exclusive, 15 over 100. And then we come here and then we say 139,200, we get 15% of that. And that's going to give you 20,880. So here you have 20,880. And then we are told that that amount, or this VAT, includes zero rated items, and that is 9.2. 9.2. So you say your 9.2, multiply again by 15 over 100. So you come here and then you say 9.2, you multiply that by 15%. You multiply that by 15%. That will then give you 1,380. So you get 1,380. Then remember, you have bought merchandise on credit from the supplier. All right. And then you get the difference here, the difference between that and that. So you're coming to say your 20,880 minus the 1,380. That will give you 19,500. So that will give you 19.5. So that would be your what? Your sales. So that should have been in that column there. But I do not have space, hence I did my B over here. Okay, so I'm going to end up with 19,500 here. And what is that? This is sales, merchandise that was sold. Sales output that will increase over here. Okay, we come now to information C, and it says, bought merchandise on credit from the supplier. The invoice received totaled to 23,000. Okay, so the invoice received totaled to 23,000 over there. That is VAT inclusive. Trade discount of 10% was incorrectly omitted from the invoice. So trade discount of 10% was incorrectly omitted. So once we bought the merchandise, that trade discount was not recorded. So we can quickly come and say that 23,000, which is VAT inclusive, let's get the amount after the trade discount. So if we take 100, we subtract 10, we should remain now with 90. So we get 90% of that. Okay, so it's going to be 23,000. 23,000, then we get 90% of that. And that would give me 20,700. I take that 20,700 and then I get the VAT, which is 15 over 115. And then I get that one, I multiply by 15 over 115. And that will give me 2,700. That will give me 2,700. And that 2.7 now, remember, we're bringing it here. And take note that the 2.7 will decrease the VAT that is payable over to SARS. Okay, and then let's quickly come. This is a summary of the transactions that we've done, and we have come to the end of today's lesson. I want to thank you for joining me in today's lesson, and I hope to see you again next week, Friday, exactly at 2:30. I'll be in this class waiting for you. Do tell a friend to tell their friends that class is continuing, and we're going to keep pushing until we write our prelim examinations. Until next time, enjoy your studies, and goodbye.